to go ahead and get started, everybody. So again, welcome everyone to the National Fair Tax webinar. And one of the things that I love to say when I present on the fair tax, and I've given probably now over the last 5-6 years hundreds of presentations, whether it's in webinar format or it's in somebody's home or it's publicly at an event or for a private group, is that it is very, very simple. And I was shocked when I first got introduced to this legislation that it is 133 pages double-spaced. And I tell you why that's important because, as you're going to see here momentarily on this slide, our current tax code is now over 75,000 pages as of 2013. And so it's so convoluted and so complex. There was an interesting study done, it was many years ago, where the same tax return was given to several different individuals who were supposedly tax specialists, tax accountants, the IRS workers, et cetera, and of the same tax return given to multiple different tax experts, it didn't come back the same once. So what we know is we've got this convoluted tax code, and unfortunately, even though it's very clear that we need to evolve and that it's really holding us back economically as a country, we've got, let's just call it a self-serving elite minority that really like to keep hidden behind this wall of 75,000 pages because it clouds transparency and allows them to operate without the American public really knowing what they're doing. So you can guess who that is. It's our wonderful Congress and the lobbyists that are in their back pocket, or vice versa. And we'll talk about that a little bit later on in the presentation. So we've got to evolve, and certainly the fair tax legislation is the best way to do that, and we'll be talking about why that is throughout this presentation. So the fair tax legislation exists right now. It's in the House, it's in the Senate, and in its most simple form, what the fair tax is a new, more evolved way to fund our government that brings in the exact same amount of revenue. So understand that it is revenue neutral. So right now, when the IRS when they collect revenues for the federal government over the course of 12 months, the fair tax has been created in a way where it is revenue neutral. It will collect the same amount of money in its first year that the IRS would collect in its previous 12 months. But it would do so in a way that would bring tremendous financial growth and opportunity to this country unlike we've never seen before in the industrial age. And so we'll get into that. So what is it? Simply, it would eliminate the income tax and all the other taxes that you see. So personal and corporate income taxes go away, as well as FICA taxes, capital gains, everything else that you see on this page. And it would replace that with one simple consumption tax to the tune of 23 cents out of every dollar on new goods, not used, and services. And then you see the two check marks there. No tax, the fair tax is not levied on business-to-business production costs or business-to-business transactions, and there's no tax on used goods. So if you've been on this presentation before, you're going to hear me share an example here, but it's just a real good one to illustrate when the fair tax gets implemented and what its impact is. So I like to use the example of a home builder. A home builder is a business, and they build brand new homes, right? So when they purchase all the inputs from their dozens of different suppliers, including the land that the home sits on, the fair tax is not levied on those transactions. It's a business-to-business production cost. So the home builder builds that home and gets it in its final peak form and puts it on the market and sells it. Well, when that home is sold for the very first time, it's considered a brand new good, and as such, the fair tax gets levied, and the consumer ultimately pays that inside the price of the good. So, for example purposes, we'll say this home is listed for $100,000. When the consumer purchases it for $100,000, they don't pay $100,000 times 23% and add that on top. So they're not paying 123. No, they pay 100, and the fair tax is inclusive. So what that means is the home builder will collect that $100,000 and set aside 23% or $23,000 in this case to send to the federal, to their state sales tax bureau at the end of the month, and they'll keep 77. All right. Now, the consumer lives in that home for however long they're going to live, and when they go to sell it, the next consumer that purchases that home, it is now considered a used good, and the fair tax is not levied, and that second consumer who purchases it does not pay the fair tax, and so on and so forth for as long as that home is resold into perpetuity. So, couple of important notes. Understand that when everything that you buy at the cash register, when you go shopping or a brand new home, the fair tax is included. You don't take that price tag and then add on 23% on top of it. No, it's included, right? Now, the next piece is to really understand how our current pricing system works so we can really get to look at what is going to happen to prices once the fair tax gets implemented. Well, in understanding our current pricing system, you know, I kind of say tongue-in-cheek that we're paying both an income tax and a federal sales tax right now because, in essence, every time we buy something, the business that's selling whatever product or service that I'm buying has passed off their income taxes onto the consumer, and that's reflected in the price of the good. So here's another retail example, and I like to use this a simple example of the designer jean company. So the designer jean company has determined that they want to generate a 20% profit per unit sold. And so what they do is they add up all of their cost of goods sold and all their overhead and all their fixed costs and variable costs and all the costs that go into their entire business, and on a per unit basis what they've determined is that they need to sell those jeans for $100 because their total costs averaged out and apportioned over all of their jeans that they sell roughly runs them $80. So if they sell jeans for $100 and it costs them $80, well then they profit $20 and that's a 20% profit margin. Well, what goes into that $80 of cost for this business is a line item of compliance costs to the federal tax code. So when they're paying accountants and they bring on specialists to consult on making business decisions that can legally circumvent the federal tax code and understanding the changes in the tax code, those are expenses. And when they pay their federal income taxes and when they estimate that what their earnings are going to be and what they're going to have to pay, that's another line item expense. And that all goes factored in, that all gets factored in as line item expenses, and then the price tag that they set includes these costs. And so when we, the consumers, pay, ultimately we're paying for their income taxes and their compliance costs. So we suggest that that is called an embedded tax, and it's very real. And across all industries, on average, it's approximately 22%. Now, for some industries, it's a lot less, and for other industries, it's a lot more. But it averages out to be about 22%. And so ultimately, we're paying, obviously, an income tax, but in essence, we're paying the sales tax. It's just we don't see it. It's embedded inside, right? So what the fair tax does is it removes this embedded tax, because obviously when the fair tax gets passed, corporate income taxes go away, personal income taxes go away, of course. FICA taxes go away. Withholding tax go away, or federal withholdings go away. And therefore, all the compliance costs go away because they no longer need to consult tax attorneys and bring people on their staff to figure out complex tax decisions, because they don't have to think about that anymore, because they're not paying tax on their income, right? So the embedded tax of 22% comes out, and the fair tax of 23% gets added in. Now, it's very debatable what's going to happen to prices. In fact, we went into depth on this in our last webinar last month. Are prices going to go up? Yes, they're going to go up. How much are they going to go up? The straight answer is we don't know. Our best estimate is somewhere between 5 to 10%. Could it theoretically go up by 22%? Theoretically, yes. Would that happen? In all likelihood, no, for several reasons. Number one are these embedded costs, or the embedded tax that comes out. So remember, the embedded costs come out, and so they're not paying federal income taxes anymore, corporate income taxes anymore. They're not paying compliance costs anymore, so this 22% comes out. And therefore, with the fair tax that comes in, necessarily they don't have to raise prices. Now, is it going to be a wash? No. Prices are probably going to go up between 5 to 10%, but what we expect to happen is, as markets get more competitive, and you'll see why in just a minute here, we'll see companies that smarten up and want to capture more market share lower their prices to pre-fair tax levels in order to get a more competitive advantage and earn more market share, right? So understand, though, as you're scratching your head thinking, oh, geez, whether prices go up by 22% or 1% or maybe on average 5 or 10%, like I'm telling you, understand that the average American's income is going to go up by 29%, depending on your income bracket, but on average 29% more disposable income. So if you are earning, let's say, $5,000 gross income, but once your paycheck comes, after tax withholdings come through, it's down to, let's say, on that ballpark it out to $3,800. Well, guess what? You're now getting $5,000. So your income is increasing dramatically. Your disposable income is increasing dramatically. And even if prices do go up by 5 to 10% or more, you're still going to come out financially ahead of the game. All right. So really important to understand this pricing and how it works. No, prices are not going to go up. And economists would estimate absolutely not by this new 23%. We estimate somewhere in that 5 to 10% range, and then they come down as markets get more competitive. So we just talked about all this, and I forgot to advance the slide, but you get the idea, because corporate income taxes go away, their FICA share at 7.65%, and the compliance costs all go away. All right, so we talk about simplicity. Now let's talk about fairness. So there's a really, really intelligent component of the legislation called the prebait that was written in and designed by its founding creators. The prebait assures no one pays federal tax up to the poverty level, and in essence what it does is it reimburses all qualifying households at the beginning of every month in advance for the fair tax they pay on poverty level spending. And the purpose of the prebate is to ensure that no one pays federal taxes on poverty level spending, so that especially lower income Americans are not being hurt by this tax. Let's take a look at it. All right, so take a look at this. So on the left-hand side, we've got a single adult household. On the right-hand side, we've got a two-adult household. And so if you look your eyeballs down the left-hand side column, you've got this family size, right? So two-adult household, family size of 4. The annual consumption allowance, what that is simply the Department of Health and Human Services inside the federal government has created this matrix, and they suggest that a family of 4 who spends $30,260 a year is spending at the poverty level limit. And anything they spend more than that is above poverty level limit spending. So if that's all they spend, then they're existing as a household right at the poverty line. And so if you multiply that 30 grand roughly times 23%, you see the annual prebate is $6,960, which is the exact amount of fair tax this family will have paid in their spending. And of course, most of that, or if not all of it, is going toward basic necessities such as housing, food, clothing, transportation, medical supplies. And then if you divide this $6,960 by 12 months, at the beginning of every month, before this family spends its money and necessarily pays its fair share of taxes, it will get direct deposited $580 into its bank account. So it's being reimbursed in advance for the poverty level spending that they will do that month. Now, every qualifying American household gets this regardless of income. So whether you're making 30 grand a year or 30 million a year, if you have a valid Social Security card, you will get the prebate. But it's really important to understand this prebate because a number of opponents of the fair tax who simply use it as an easy media way to demagogue their opponent by simply saying, oh, my opponent supports raising taxes by 23%. But they don't say that they're going to eliminate income taxes and Social Security tax withholdings and that your average income is going to go up by 29%. But anyway, so what you've got here is a really important piece of the legislation, and it's a brand new revenue stream that comes into people's household. And so now think about this for a second. Truly, is lower income class American households, are they really going to be worse off under the fair tax? Hardly. They get to keep 100% of their income, so their income on average is going to go up by 29%. They get a brand new revenue stream coming into their household to the tune of, in this case, $580 for a family of 4. They can choose to purchase used goods and save on the fair tax that way. And so you are creating an economic windfall for Americans, but especially for lower income class Americans who are going to realize more money more disposable income than they've ever had before, as is the case with all Americans. All right. So why is this so valuable economically? Well, think about this. First bullet point, $30 trillion in global personal and corporate assets are parked in offshore banking centers, and that will get attracted to the United States. It will come back into our economy, and it's estimated that $1 trillion organically will come back into this economy in the first year. Why? Well, think about this. You're a wealthy person or a wealthy business. You've got money sitting in offshore accounts earning some interest. Why is it sitting there? Ultimately to shield from Uncle Sam so it doesn't get eaten up by the government, by capital gains taxes and corporate income taxes or personal income taxes. Well, the moment the fair tax gets passed, boom, that risk and that threat go away. And guess what wealthy, intelligent, savvy business owners are going to do with their money? They're going to do with it what they know best, which is invest in their businesses. And so they're going to expand. They're going to hire people. They're going to build new buildings and new infrastructure, which means more jobs. And more jobs means lower unemployment, which means more income for more people, which means more spending. And so you've got this incredible financial cycle, and it turns what I call this financial flywheel that starts out small, but as soon as this money starts rolling in and these businesses expand, all of a sudden it gets faster and faster, and more people get more jobs and better jobs and make more money, and they spend more and they invest more, and as a result, all the businesses are experiencing growth and more revenue as well, which perpetuates expansion in jobs. It's pretty amazing. And then you look at bullet point number 2. We become a corporate headquarter haven because we have the lowest effective corporate income tax structure, 0. And so companies will be relocating the United States in droves. Again, more opportunity, more jobs, building more infrastructure, etc. And then for the federal government, the underground economy, estimated at $2 trillion now, pays their fair share. Right? So every time the tax avoider, the drug dealer, the illegal alien, etc., go to buy a loaf of bread, a new pair of jeans, a sports car, a new house, jewelry, whatever it is, boom, they pay their fair share, and the federal government gets to collect that. And so why does this work? Why does the fair tax work at the rate of 23%? Because as you probably know, if you're tuning into this webinar, you're probably savvy enough to know that right now, literally, only 50% of Americans actually pay taxes. And due to all the rebates and the credits and all the loopholes in the 75,000 pages, only 50% end up paying the federal government any money every year. Well, with the fair tax, we broaden our base to 100% of Americans paying their fair share, but doing it in a very progressive way, because the more you spend, the more you pay. And so is this going to curb spending? Hardly. By putting more money in people's pockets and giving them more disposable income than ever before, we're going to realize a spending free-for-all that we have never seen before in the industrial age. Pretty cool stuff. All right. So how does this whole thing work? Well, the infrastructure is largely in place because there's currently a state sales tax in 45 states. The state sales tax bureaus will be created under the umbrella of the Department of the Treasury. Every month, they will collect from retailers 23% of their receipts. Very simple. They're going to get 80% more efficient right off the bat because now we're collecting from 18 to 20 million businesses instead of 120 million households. And there's only one form to fill out. Very simple. Here's my gross receipts. Multiply that number by 23%, and that's the amount of money you need to send into the government. States and retailers are then and the state sales tax bureaus are incentivized 0.25% of the collection of that national sales tax to fund themselves and police the fair tax in a way that ensures everyone's paying their fair share. So you've got a new tax system that gives the federal government the same amount of money. You've got it does it in a way that it inspires economic growth and expansion as opposed to deters it by penalizing people when they grow and make more money, which is exactly what our current tax structure does right now. It's simple, it's easy to recognize, and it's totally transparent, because when you go to buy that pair of designer jeans for $100 on the receipt, $23 is going to say federal sales tax. And it's transparent because if that number gets higher, you're going to see it on your receipt, and you're going to call up your congressional representative and say, what gives? So why would anyone be opposed to this? Only if their current income and their current status and power, if you will, is derived from our tax code. And so I said earlier on in the presentation that you've got a very select, self-serving minority that don't want to see anything change, and you're looking at those folks on the screen right now. you've got politicians who largely get huge campaign contributions from corporate donors to manipulate the corporate tax code in favor of those corporations, which, by the way, a study was done, returns $6 for every dollar they invest in lobbyists who lobby the IRS on behalf of the wealthy corporations they represent. So the politicians really like those campaign contributions. So since they're unfortunately more interested in re-election than representing their district, well, they don't want to see that go away. 50% of lobbyists are tax lobbyists, and there's no more corporate income tax to lobby against or to manipulate. Then their job goes away, so they feel threatened. And of course, the IRS gets defunded after 3 years. So that's what you got. You got self-serving individuals who are thinking small, thinking for themselves, who unfortunately control how things go down in this country, and they're pulling the strings. And we got to change that. And the fair tax not only will benefit every American by putting more money in every American's pocket and give us more opportunity and grow this country financially, it will be the biggest transformation of power we've seen ever in the history of this country, because it'll bring the power back to the people by creating a system that forces complete transparency and gets politicians back doing what their civic duty is supposed to do, which is simply represent their constituents. All right, so that's the gist, folks. So we got to keep getting educated. There's a couple of great books put out there by Neil Bortz. This is the second one. This was also done with his cohort, John Linder. They helped write this together. We suggest buying this for family and friends. Send it to your congressperson. And there's a number of great websites that you can tune into to get a lot more information. So what we're going to do now is pause. We've had some questions come in, and we want to field some of those questions. And then we are going to wrap that up, and then we'll hit the special topic briefly and then finish with any more questions. All right. So, Larry, I will ask you to unmute yourself if you haven't already, and I'm going to throw some questions at you here.
Okay, Mark.
All right. Great starter question by John, who says, why isn't the fair tax making more of the current IRS atrocities? And so, Larry, you're obviously familiar with that. Do you want to shed some light on that and then give your opinion?
I wish I could shed some light on that. I don't know why fairtax.org is not making more of it. Although I will tell you this, I asked this question of Cynthia Canavero about a week ago, and she commented back that she was working on a press release to address these issues. Now, whether or not that is going to be approved for publication, I don't know. But the best I can tell you is that it's being worked on by headquarters. Mark.
Gotcha. All right. Well, certainly, if you go to fairtax.org and you opt in with your email, I've gotten dozens of emails from fairtax.org. Illuminating this situation and bringing a lot of attention to it, but certainly it's a great opportunity to bring the fair tax education to the public in light of the situation, folks that are not on the fair tax list. So hopefully they will leverage this soon, and they have the funds to get the word out.
I will add also, Mark, that Cindy's home is in Moore, Oklahoma, and she has been affected by the tornadoes out there. So maybe that's taking a second priority to other things in her life right now.
Yeah, fair point. This question comes in from Tim, question/statement, and I've addressed a little bit of this at least, but certainly want to hear from Larry. Tim says, Rush Limbaugh says it's probably impossible to get a fair tax to replace the income tax. The reason is that the income tax empowers all politicians to steal so much and enrich themselves so much that they'll never allow it to be replaced. What are your thoughts about that comment? Larry?
Well, I don't disagree with Rush, except in using the word impossible. It's going to be super difficult. We've known that for a long, long time, that the income tax gives our congressmen the power to manipulate society, and they get tremendous campaign contributions from special interests if they support the interest of that special interest. However, I'd like to point out that we've got, I believe now it is 64 co-sponsors in the House of Representatives, 4 or 5 in the Senate. And most of these people, probably 90% of them, did not co-sponsor the legislation because they think it's the greatest thing since sliced bread. They co-sponsored the legislation because there were enough constituents in their district that let them know their jobs were at stake. And that's my challenge to those of you who are listening to us tonight. Get out there and continue to let your congressmen and your U.S. senators know that their jobs are at stake, that you will not support them for re-election and will in fact actively seek a replacement for them who will support H.R. 25 or right now S-122, the Fair Tax Act. Mark?
Yeah, thank you, Larry. Great point. Okay, so Matt asks, I think as a point of clarification, when a business is pricing their product or service, he says, so the business adds in the cost of the fair tax before they hand the invoice over. And what I think, Larry, correct me if I'm wrong, that Matt is intimating here is that when they set the price, I think that's what he might mean by invoice. If not, Matt, please clarify. But yeah, so the cost of the fair tax itself is inside the cost of any good or service that you purchase. So again, that designer jeans example, when you go to the mall and buy a jeans for $100, the fair tax is included in that. And the business has added in that as in this case, it's cost. And then when that purchase comes through, they'll set aside 23% of it and then remit it to the State Sales Tax Bureau. Pretty straightforward. Anything else that you think I need to clarify, Larry?
Not necessarily, but just in case Matt is considering that question with respect to business-to-business transactions, the fair tax will only be applied by businesses who are selling at retail to the final user of a product or service. There is no implementation of a fair tax on any business-to-business transaction. Now, you mentioned that, Mark. I just want to bring that up again so that Matt is clear on that. Thanks.
Yeah, thank you. So Don asked the question, when are you going to get the message out via Oprah, The Daily Show with Jon Stewart, et cetera, et cetera? Don, as soon as you or somebody of influence can connect us to those individuals, and that is not a straight answer. There's no sarcasm in that whatsoever. We would love nothing more to broadcast this out through well-known media elite. It's a matter of, when it comes to that, who do you know? And, you know, I'm not sitting in the inner circle of Fair Tax headquarters in Houston, Texas, but I imagine if they were close friends with Oprah and Jon Stewart, that we would have heard through those shows years ago. So it's a matter of connections. So if you've got the connection, Don, please do make the connection, and we will certainly get that message out. And that's where this grassroots effort is so crucial. We've got to educate everyone, not just the masses, but the elite. You know, who break bread with the Oprahs and the Jon Stewarts of the world, and who can put their hand up and say, "Wait a minute, we got to really look at this." So, thank you for your question. It's well taken, and that's my best answer for you. Larry?
No, I have nothing to add.
All right, Jennifer asks, won't welfare families be against this? Nope, they won't, Jennifer. Not one bit. In fact, if you're on welfare, you should be clamoring for this. Why? Because the fair tax has nothing to do with welfare programs. It's not going to impact welfare programs one bit other than continue to grow the economy, which should bring in more tax revenue for the federal government, who could then potentially expand those social programs. So it doesn't hurt that whatsoever. There's no taxes. They get reimbursed for all their poverty level spending if they're at that poverty level spending via the prebate. And there's going to be nothing but greater opportunity to advance financially, because under the fair tax, the financial market opportunity is going to dramatically expand and grow, which means there will be greater job opportunity for them if they're on welfare. Anything else on that, Larry?
No, not really. Go ahead.
Okay. Let's do this. We've had a bunch more questions come in. That's great. Keep the questions coming in. We're gonna do one more, and then we'll hit the special topic briefly, and then we'll come right back to the questions. And the special topic is a real simple one. So this question is, how does a business that does B2B and B2C transactions handle the fair tax? I would really, Matt, who wrote that in, if you could expand or give me an example of what you mean by the difference in B2B versus B2C transaction, I could largely handle that much easier.
I know what he's asking, Matt. Mark.
Oh, go for it.
Yeah. A business that would be selling to another business as well as to a retail customer. There's a lot of them. If they're selling to another business, they do not collect the tax. If they're selling to a retail customer, they do. And it is really as simple as that. And their software will handle the difference. When a customer comes to them who is a business, they must show them their business license and that they are authorized to purchase without any tax embedded. So they would buy at the actual cost, wholesale cost of the product. If a customer comes in and does not have that license to purchase without tax, then they have to pay the retail tax. I think that should cover it. Mark?
Yeah, that's perfect. And in fact, Matt wrote back in, his family owns a lumber yard that does 30% B2C and 70% B2B, and you handle that perfectly. So hopefully that looks after your question, Matt. All right, so let's just really quickly talk about this idea of consumption tax stability versus income tax stability. So before I go through some of the slides, and I'll preface this by saying that there's a lot of numbers that could be looked at here, and I tried to find some graphs and data that really put forth this concept in a way that was simple for the purpose of this webinar, but certainly we could dig in and convolute it and really dig into a lot of numbers. But here's the gist. Think about this for a second. So think about the recession that we went through. So whatever started it, I don't know what came first, the chicken or the egg, but people stopped buying, so businesses got hurt, and then there were layoffs, and then people didn't make as much money, and so their income, right off the bat, their income went down. Either they lost their income completely, or they lost a large part of their income, both individuals and businesses. We all know that. So let's say that on average, and I don't know what this number is, but I'm sure it's out there in the internet world. You know, let's say on average that business and individual income dropped by, I don't know, 25% across the board. So right off the bat, the federal government is taking a big hit because people are dropping in their income tax brackets. So the federal government is obviously collecting a lot less tax right off the bat. However, now are these people? So that's the income side. On the consumption side, sure, they're not going out and buying brand new cars and buying bigger homes as often as they were, and buying large ticket items with their disposable income because their disposable income has dried up. But they're still consuming. They have to consume. They're still consuming to maintain their lifestyle. They're still consuming to put a roof over their head for their family, buying gas, paying their car payments, buying food, buying clothes, buying business supplies, right? And so I wanted to frame it this way up front because on those merits alone, when you think about it, an income takes a direct hit. A consumption takes, let's call it an indirect hit. And I think that might be a good way to frame why a consumption tax is more stable for the government than an income tax. And so we'll back that up by just some graphs that I pulled together here, and then if there's any questions on this and you want to dig in more, we certainly can do that. So you look at this. This is a graph of median income, household income. And the purpose of me showing this graph is you look back over, I guess this was done over 40 years. There's several dips, right? Happen every decade. But if we advance the slide to GDP, which is a sum total of all the production, which is typically equal to the consumption, you know, in a vacuum, you basically consumption equals production. So, and obviously we don't live in a vacuum, but you get my point here. So if you look at this graph, literally at no point in any of these decades, save the Great Recession, did GDP dip. And so if you're looking at this, you know, through a very simple lens, what you see is a lot of fluctuation, if I go back, in median in income, and largely, or excuse me, next to zero fluctuation or dips, and nothing but growth in consumption. And here's another graph that shows the red on top, or this is well, here we go. This is, sorry, spending, and so you've got other spending versus personal spending. And again, you know, you're looking at over the years, you get some plateaus, but with the exception of back here, and what it doesn't show, because it's, you know, we've only gotten to 2006 up here, is the dip in the Great Recession coming up. But beyond the plateaus, you don't have any dips, right? So spending is statistically and historically more stable than income, and I think the way that I framed it, hopefully the way that I framed it, gives you a good understanding of just why that is. And then what I did is I actually put together this chart, and it's actually tough to see, but this is GDP going back to 1929 all the way through 2007, and in one or two spots here, and I'm remiss in that I don't remember exactly what years they are. Back here in the 1937 and 38, you've got a dip in GDP, and then you've got it one more time in 90 to 91. But other than that, there's GDP growth, which means there's consumption growth, right? So you've just got more stability, and you know, this is the way we got to move, folks. This is the way we're going to really outgrow the world, by taking a big leap here and just evolving our tax system. and just what it would do for every American and for this country and for our government would be absolutely amazing. So, oops, excuse me. There you go. Sorry about that. Okay, here we go. All right, so if you've got any questions about that, then certainly go ahead and write them in. But let's get back to, I'm going to leave these websites up here for you. Let's go back to our questions, and then we'll wrap it up for the evening. Okay. You ready, Larry? Yeah, take yourself off mute there. Okay,
yes, I am. I'm on.
The first question, good, is a scenario and then a question from Joan, which is, if two seniors live together and are not married, do they get the prebate as shown for a family of two each month? It depends on see, that household will get the prebate. But correct me if I'm wrong, Larry, that household gets the prebate, not each individual senior living in the house. Is that correct?
No. Individual seniors will have their own Social Security accounts, and since they are not married, will each apply for the prebate and are qualified to get it if they're residents within this country and have a proper Social Security account.
Got it. So the key there is the marriage factor. Is that right?
Yes. If they're married, of course, then they would, because there's no marriage penalty, they both get the same amount anyway. Just the check goes to one person. If they're not married, the check goes to them individually, but they're each in total getting the same amount.
Okay. Got it.
Now, if you consider, for example, a college student who is going out on their own, and they are paying their own expenses, they would get their own prebate, even though they may be qualified. They may still be under 18 and qualified to live under their parents. So it just depends on how they're living.
Yeah, but just to be clear, a married. Oh, sorry. I'm tripping myself up here. Okay, got it. Very clear. Married versus unmarried. All right, so seniors on Social Security will not experience an increase in pay as they do not have taxes taken out of their checks. Is that correct? And if that is correct, isn't this fair tax going to hurt seniors? Larry,
I got it.
You're on.
Okay. True that if they're not working, they're not having anything withheld. However, if they are drawing pension income or income from distributions from a 401k or some other retirement IRA, they, under the income tax system, are being taxed depending on whatever their total tax bracket is. Under the fair tax, those distributions are not going to be taxed, so they get that money without any tax component being withheld. Furthermore, the fair tax is written such that seniors in their cost of living adjustment, you've heard the term COLA referred to, cost of living adjustment. The formula for them under the fair tax is modified to include the increase that any sales tax would have. And so they're not going to be hurt whatsoever as far as the fair tax goes, and they're going to benefit tremendously by not being taxed on distributions from the pre-tax retirement plans that they may have contributed to while they were actively working. So that's going to be a financial windfall for them. Mark?
Yeah, plus the prebate.
Plus the prebate, which will take care of any Social Security they're getting in most cases.
Yeah. Question from John, is the fair tax collected on rental property, such as rental rent payments from an apartment house? Yes. The fair tax is collected on rent payments, as it would be, because that's a service. You're paying it for a service, for housing, as it would on a mortgage payment. Pretty simple answer. Anything you want to expound on there, Larry?
Only that some people that I've responded to that question have said, oh my gosh, that means I'm going to have to increase my rent. But you have to take into account, please, that you will not be paying any more income tax whatsoever. Or, look at it another way, under the income tax system, you have to spend $1 in order to beg to get 25 cents back or 15% back or 10% back, depending on what your tax bracket is. That goes away. You don't get that. You don't get to have any tax component under the income tax system now. So your costs will go down. You're keeping every dollar that you earn, regardless of whether it's from rent or some other employment, and you will be charging, as Mark noted, the sales tax on your rent. And then competition will determine whether or not you can increase your rent or not. Mark?
Yeah, thank you, Larry. Would a business, as the final consumer, quote unquote, pay the fair tax? No, because they have a business license, and if they are purchasing something from another business, then, as has been explained earlier, they show their business tax license, and as a result, the fair tax levy gets waived. So that would fall under the business-to-business transaction, even though they may be the final consumer to whoever they're buying from. It's still two businesses involved in the transaction. A follow-up question to that from Aaron asks, how are services handled versus goods, both business to consumer and business to business? There's no difference. So if you, for example, if you go to the dentist and you pay $100 for your dentist visit, the fair tax is included in that $100 dental visit. And the dentist, that business, is required to set aside 23% of that transaction and collect. So whether you're buying that dental service or you know, you're buying a pair of jeans, that's handled the exact same way. Anything else, any other example you might give for that, Larry?
No, you have it. If they're providing a service, they charge the tax. However, I will note that the services industries in general, but more specifically the medical industry, construction industry, they were at the high end of the percentage of taxes that are embedded in the cost of what they provide. In other words, the research that was done showed that depending on the industry, there was 20 to 25% embedded in the cost of everything we buy. So in this case, that 25% is going to go away, and then the dentist will provide a new pricing based on what his new costs are. Mark?
Good. By the way, a lot of great questions tonight. There's some, I'm sort of reading ahead here, and we've had a lot of good ones, and there's some more good ones coming, so thank you. Okay, this question comes in from Donald, who's asked, or creates the scenario. Let's say the family purchases an older home, no tax, correct? Correct, as long as it's been purchased by a consumer before. Now, let's say that family invests in renovations for that older home. How will that be taxed? That will be subject to the fair tax because, again, they're purchasing the services of a contractor. And remember, all services rendered are taxed and new goods. So that's how that scenario would play out. Okay, Stephen asks, what happens to 401k savings, etc.? No tax when you pull it out. That is correct. No tax when you pull it out. Also, does a doctor include the tax in his bill, i.e. for personal services? Yep, we covered that. Let's see. This is from David. David says, one of my senators stated this as one of his reasons for being opposed to the fair tax. He described it as potential for wide fluctuation in federal income. He got his facts wrong. Yes, he sure did. You know, and here's a point that's worthy of making. So thank you for stimulating this, David. These politicians don't know a damn thing about the fair tax. They're as uneducated about it as any American out there who's just as ignorant of it. It's lack of education. And so we've got to take some responsibility, and we've got to make enough noise as constituents in our district to say, if you don't co-sponsor this, your job's at stake. And if they don't know anything about it, guess what? They're going to learn about it. So we got to make some noise.
Mark? Mark?
All right. Yeah, go ahead.
On that question,
yeah, go ahead.
If you will send me an email, Mark, I don't know if you can show my screen. I've got a chart up here that shows from 1975 through 2001 in detail the fluctuation between adjusted gross income and personal consumption expenses. Mm-hmm. And if that gentleman who just asked the question will send me an email requesting it, I will send him this file, this chart, and he can show it to his senator. But this is from the research that was done over $20 million worth before the fair tax legislation was even written.
Yeah, and we can, David, yeah, just when you get an email, you'll get a follow-up email from this webinar automatically, and Larry's email is attached to that, so just follow up with that. Don asks, is there a website indicating who the co-sponsors are? Absolutely, fairtax.org, and you can get the congressional scorecard there. So go check that out. A question from Jennifer. How are imported goods affected? Will we get trade wars? This is always an interesting one. Larry?
Ask that one again. Will we get trade wars? I would kind of hope so. The competition is what's going to cause the pricing to stabilize because all businesses are going to benefit from not having corporate taxes or personal income taxes withheld any longer. So their costs are going to go down. There's going to be a challenge for the new jobs because they're going to have growth, which is going to demand they expand their employee base, and that's going to help the job market and help the cash salaries that are paid or the wages that are paid for those jobs. So there's going to be some. You might want to call them trade wars. I wouldn't address them as that per se, but there's no doubt there's going to be some competition, and we're going to all benefit from it. Mark?
Yeah. Question, if a business is buying a product that they will not be reselling, do they pay fair tax? No, because they're a business, they have that business number, and they can demonstrate that they need to use it for business purposes. So that, again, would fall under the
Matt, Mark, I need to correct you on this one.
Oh, really?
Really? If they are the final consumer, they will pay the fair tax, and they can do it one of two ways. Either they'll pay the fair tax when they buy that goods, or when they file their monthly tax return, they will have to declare what their purchases were and what they are due to pay the tax on. So one way or the other, they're going to be responsible for paying that.
Look at this.
If it does not go into the cost of producing whatever it is they produce, it's just a consumed product. Toilet paper is a consumed product. They're going to pay the tax on it. I don't know if that's a good example, but I find it pretty enlightening.
Actually, it is a good example. Not one that I want to think about, Larry, but anyway, a good example nonetheless. So thank you. I learned something again, as I always do from you. So thank you, Larry, and thank you for that question, Matt. Okay, in the states that have sales tax that are exclusive, in the states that have a sales tax that are exclusive, would this be considered double taxation because the fair tax is inclusive? No, because remember, the fair tax is happening at the federal level. And it doesn't impact what states are going to do. The states are going to figure out, what they're doing with respect to sales tax and making it inclusive or exclusive or getting rid of it or doing away with their state income tax, etc. So I wouldn't consider it a double tax. You would certainly see it on your receipt, but remember, it's coming from two different entities, your state government versus your federal government. All right. Will seniors benefit, Larry, from the elimination of the hidden taxes?
Well, I think we're all going to benefit from that. Seniors won't benefit uniquely because they're seniors. The hidden taxes are in the cost of everything they buy now, so costs through the supply chain are going to go down. The retail seller is going to add the fair tax. The senior is going to get a prebate, which reimburses him for all of his spending up to the poverty line for his family size. So there's no special benefit for seniors just because of that. Mark?
Yeah. David disputes the legitimacy of rent being taxed. He suggests that we are off base and rent is not taxed. I don't know why you're saying that, because rent, again, it's a housing service. You're paying for a service.
Okay, well, this is not the venue for arguing that. I disagree with you, David, and if necessary, you send me an email. I'll find the place in the legislation where I think it mentions that explicitly, and I'll send that to you. If I can't, I'll find some other information that we have that will dispute your belief right now. David? Mark?
Yeah, always a good mediator. Perfect. So at the time a new property is sold, then yes, a fair tax amount, let's see, must be paid, but, oh, okay, that's David. Okay. Sorry about that. All right. So, sorry, I'm going through some duplicate questions here. So we're getting some interesting questions about the rent issue. So Don writes in, if I sell my existing home, I won't have to pay the fair tax on it because it's a used property. But if I rent it out, I will still have to charge a fair tax to the renter. Correct. From this vantage point, correct. More on that if you want to email us. Interesting question, Bob. Are doctor visits for the same malady considered taxable each time?
Yes.
I would say yes, because every time you go in, it's a new service rendered. You would agree with me on that, right, Larry?
Absolutely.
Yeah. If you borrowed money from a lender, would there be tax embedded? We've talked about this. I can't remember the nuance of this. You want to handle that one, Larry?
Yes, there is no tax on money borrowed. There will be a tax for the service that the lender provides explicitly, the service that he provides to process your application. Mark?
Got it. Paul asks, under the fair tax, will imported and domestic products be taxed the same?
Are you waiting for me? The answer is yes.
Perfect.
If you buy something from overseas and have it shipped in, before it gets to your home, it has to go through customs, and customs will be empowered to collect the 23% on that item. Mark?
Good. John asks a great question. What do you say to a person who thinks the rich are getting away with not paying their fair share? It's a great question. I'm going to revert back to a statement I said earlier in the presentation and say that the fair tax is extremely progressive because you get taxed on what you spend, and the rich are spending tens, hundreds of thousands, maybe millions more than somebody who's poor. So if somebody who's poor, let's go back to the prebate example, married family of 4, and they're spending 30 grand a year, they're spending at the poverty level, and they're actually going to get reimbursed all that money back, the tax that they pay on that spending. The rich spend, what, 300,000. Well, they get reimbursed by a prebate for the 30,000 that they spent, but the 270,000 they spent over that, they're paying 23% times that number. So clearly they're paying their fair share. So I would just bring up a numbers example, and it's pretty clear from my vantage point that it's extremely progressive and very fair that way. Anything else you would add to that, Larry?
Yeah, one item. I do have a chart that I would be happy to provide to whoever asks for it that indicates every one of us who are paying taxes under the income tax system will pay less over our lifetime under the fair tax should everything remain stable. In other words, our income is stable, our expenses are stable, and there's no increase in tax rate. We will pay less under the fair tax than under the income tax. The reason is, under the fair tax, there will be so many more people paying into the system who are avoiding it today, whether they're avoiding it by not providing an income tax return at all, or underestimating their income, understating their income, or they're taking advantage of loopholes that are in the income tax system. Those loopholes go away. So those people who are avoiding taxes today will be paying, and therefore all of us will be paying less. The Fair Tax Advocate, and I can't think of her name, not the Fair Tax Advocate, but the Income Tax Advocate for the people of America, has made a report every year, and she continuously claims that we're paying, the average taxpayer is paying something in the area of $2,600 more every year to make up for what the IRS calls the tax gap. The tax gap is the $430 or $450 billion that is uncollected every year. They'll be collecting that under the fair tax. Mark?
Good follow-up question coming your way here with that final point you just made. This comes from Donald, who asks, who says, one of Ohio's senators is extremely progressive. His opposition to the fair tax is that it will create an underground economy. I assume that means a recreation of the old Soviet system of bartering for goods and services. How does the fair tax propose to avoid that problem? Larry?
We don't have a proposition to avoid that. There's a big underground economy right now under the income tax system. Just ask him, what are they doing about that? What is he doing about the underground economy today? What is he doing about the $450 billion that the IRS calls a income tax gap? He's a phony. Elect somebody to replace him. There will be some amount of an underground economy, but it's not going to amount to as much as it does today under the income tax system. Mark?
Yeah. Seniors living on their savings have already paid taxes on that money, since when they go out and buy new goods and services and they're paying a consumption tax, how will this affect them?
Well, we answered that previously to some degree, but remember that they're getting the prebate now under the fair tax, which they were not getting under the income tax. So they're literally not paying anything on their essentials of life. Their cost of living adjustments have calculated into the new formula, the fair tax, any increases that might take place. So they're not going to be hurt there. If they're living off of savings, it's probably savings that was put into an IRA or a 401k or something of that nature. They're paying an income tax now when they take distributions on that savings. Under the fair tax, that will not be taxed. That's a windfall for them because they paid tax on it previously. They're not going to pay, they got that money earlier without taxation, and they expected to pay an income tax on it when they took it out in retirement. Now it's not going to be taxed in retirement. So they're benefiting pretty well. Mark?
Yeah, and also remember that while prices are going to go up marginally in the first year or 2 years, maybe 5 to 10%, as Larry mentioned, they're getting some offsets there in their adjusted income, as well as the prebate coming in, as well as the ability to choose to purchase used goods. But understand that we're not talking about, we don't know, but we're not talking, what we suspect is we don't we're not going to see massive price increases. So at the end of the day, with the adjustments that they're getting in the prebate, it's going to be really kind of a wash for them with some marginal increase in prices. And then after a couple of years, we expect those prices to come down to pre-fair tax levels, and then it doesn't matter because the price is the price is the price. So whether there's tax embedded in it or not, the price is the same, and they're not going to notice a financial difference one bit. So just a point I wanted to make, that sometimes we forget that they're going to be paying this massive new amount in terms of prices for goods and services, and that's just not the case. All right, how about buying something on the internet? Will the fair tax be collected? Sure. So again, is it a good, if a retailer sells something over the internet and it's a brand new good, then whether it's sold in a bricks and mortar store or over the internet doesn't matter. They'll be responsible for allocating the required 23% over their state sales tax bureau. Let's see, guys. You guys have done a heck of a job with these questions. Our own David Leake, who's a great supporter of ours and is a good friend, suggests that a comment about the trade war question. The questioner was asking whether there would be an international trade war, and the answer is the fair tax will level the playing field. Thank you for that comment, David. Is the fair tax a benefit to those with effective tax rates over 23%, whereas those with effective tax rates below would have increased overall tax? Larry, you get that?
I think I do. Let me read the question here again. I've got it on my screen. Is the fair tax a benefit to those with effective tax rates over 23%, whereas those with effective tax rates below? Okay. Aaron, it might seem so on the surface to you, but the answer is no. And once again, I'll refer back to the statement I made a little earlier, that under the fair tax, every one of us will be paying less lifetime. We have a lower lifetime liability for taxation under the fair tax than we do under the income tax. Now, a person who is in the effective tax rate over 23% is not that wealthy a person. However, if they're spending above the income tax level, you still have to remember that if they're a resident, a legal resident, and if they have a Social Security account, they will be getting a prebate. That neutralizes any tax that is collected on the basic essentials of life. So it's I don't know. I can't paint a super clear picture of that, but based on the trends, I would say no. There's not going to be any extra benefit for them, or if they're taking advantage of some loopholes now, there may be some additional liability. They may be paying more taxation than they were previously. Until I think about, once again, the research says everybody, all of us are going to be paying a little bit less. The lower our income, the greater the amount is reduced for our tax liabilities. I hope I didn't stumble on that too much. Mark, if I did, try and straighten it out for me.
No, I think you got it, and then you re-explain it again in a different way, but I think the point stands. And Paul makes a point that says the fair tax does not divide us into classes. As you spend more, you pay more tax and at a higher rate. Okay. So Don wrote in, how do we email us? How can you email us? So you're going to get an automated email as a follow-up to this, thanking you for being here. And inside that email that you get is our email address, and that will come to Larry, and we will absolutely answer any further questions you have. And what we encourage you to do, guys, is go to fairtax.org, find a local group, get involved, invest your time, invest your money, and come back next month and bring somebody else that you know isn't is uneducated about the fair tax. All right, so thank you for your wonderful questions, your attention, and let's just keep moving this thing forward. You know, get in touch with your elected officials consistently every month. Postcard, fax, email, send them the book, and just keep the pressure on. Influence the people that you know. Get them to the webinar, and let's try to make a big difference in our country for the generations to come. So thank you to my colleague Larry, who's always a wonderful wingman and a great wealth of knowledge. And a thank you to all of you tonight. We hope you have a great, fun, relaxing, healthy, and safe Memorial Day weekend. And we will see you all back here fourth Thursday in June at 8 p.m. Eastern Time. Have a great night, everyone.